Welcome to the FMLS Market Intel Report. I'm Leslie Appleton Young, FMLS Chief Economist, with our Happy Holidays edition. Not only is the November housing market data in, but the Fed's December 10th meeting delivered on the anticipated quarter-point cut. But let's get into our local housing market. For the greater Atlanta market area, November mirrored the affordability-constrained market we have seen for the past 3 years. With 2,732 closed sales, activity was down 10% from November last year. And while supply is growing at a slower pace, it's still up 15.3% year over year and is now double the total in November 2020. What a difference. Months of supply reached 3.9, the highest in at least 5 years. The market continued to slow, with median days on market rising to 27 and average days on market increasing to 46. What about prices? The average sales price was $564,380, up 3.1% over last year, while the median sales price was $430,000, off a slight 1.1%. So what we have is a market with significantly more properties for sale, slightly fewer sales, and prices flatter than we have become used to. The fundamentals of economics tell us that more supply should cause prices to fall, improving affordability and accelerating sales. But that's not what's happening. What's going on? You may have heard the term K-shaped economy. What this means is that different parts of the economy are pulling in different directions. Wealthier asset owners, think households with a stock portfolio and a house, are doing relatively well, while other groups are struggling, a classic K-shaped pattern. We see this playing out in the housing market, with affordability at the entry level being the biggest constraint to the market right now. According to Case-Shiller, home prices have risen more than 50% since 2019. Over that same period, the median household income has increased by just over 20%. Many would-be buyers are simply being left out of the market, hence the softness in demand. Dr. Lisa Sturdivant, chief economist for Bright MLS, noted that the housing market is mirroring a K-shaped economy with diverging conditions across price tiers. She noted, higher cost markets with higher income buyers are seeing faster price growth. The growing divide in the housing market is troubling because it is leading to a wider wealth gap. The story of the K-shaped housing market is borne out in the data from NAR's 2025 profile of home buyers and home sellers. The market share of first-time buyers dropped to just 21% of the market, an all-time low. At the same time, the median age of a first-time buyer rose to an all-time high of 40, another sign of stress in the entry level. The age of repeat buyers also reached a record high of 64 years. The share of all cash purchases also reached a high of 26% as equity-rich homeowners traded up, down, or out, while mortgage-dependent first-time buyers were shut out. There has also been a noticeable increase in the length of time buyers plan to stay, increasing from 6 years in 2000 to 15 years now, with 28% of buyers saying this will be their forever home. These developments should be of concern to all of us because housing remains far and away the most important vehicle for building wealth over time. As younger generations have a harder time getting into the housing market, their ability to accumulate wealth through homeownership is delayed. Meanwhile, higher income and older homeowners are benefiting from the significant increase in housing equity over the past few years. In other words, while the economy and the housing market are okay, it's not okay for everyone. One aspect of the market that has not changed is the value placed on the services provided by agents and brokers. Not only did 91% of surveyed home sellers list their property with an agent or broker, the share of for sale by owners was at a record low. What you do matters. Take a look at Market Intel on the FMLS website to access the most current market statistics. They are updated weekly. If you're interested in resources relative to our market dynamics and want to dive into local areas, we've got you covered. For FMLS Market Intel, this is Leslie Appleton Young wishing you a wonderful holiday season. I'll see you next year.